In this video, we will talk about negative gearing, a term that's been thrown around a lot when it comes to the Australian housing market. But what happens if it's removed? Will it make housing more affordable, or could it worsen the crisis? Hey everyone, welcome back to Property with Premier Buyers. If you are new to the channel and if you haven't already, please like, subscribe and hit that notification bell. It'll help us keep creating new content for you. Let's start with the basics. What is negative gearing? Negative gearing is when the cost of owning an investment property like mortgage payments, maintenance and other expenses exceeds the rental income. Loss can be deducted from the investor's taxable income, reducing the tax bill. It's been a major incentive for property investors in Australia, especially for those who rely on the tax savings to offset their costs. Negative gearing benefits a significant number of Australians. In fact, according to the ATO, almost 2.3 million Australians own investment properties. That's about 20% of all taxpayers. Interestingly, 71% of these investors only own one property. And of those, around 950,000 landlords made a loss and relied on negative gearing to offset their taxable income. To understand what might happen in Australia, we can look to New Zealand. In 2021, they removed negative gearing for landlords, and the results were mixed. Before the change, rents were rising at about 4.7% per year. After the policy shift, the rent increases jumped to 6.8% annually. Investor activity decreased and the renter supply shrank, leading to higher competition among tenants. Home ownership increased, but only marginally. The overall rental market tightened, making it harder and more expensive for tenants. Within 3 years, this policy was reversed earlier in 2024. Did you know Australia has actually tried removing negative gearing back in the 1980s? The result? A rental crisis. Rents skyrocketed in Sydney and Perth, and the government had to reverse the decision just a few years later. The lesson from the experiment is clear. Removing negative gearing doesn't make housing more affordable. Instead, renters often end up paying the price. So what happens if negative gearing is removed? Here is what you can expect. The immediate effect will likely be a reduction in property investment, especially for new investors. The removal of tax benefits will make property ownership less attractive, particularly for those who rely on negative gearing to make their investments viable. Some current investors, especially those with tight cash flows, may decide to sell their properties, leading to a short-term increase in property listings. While this could create a temporary dip in property prices, the long-term impact might be different. Australia's rental market is already under pressure, with vacancy rates below 1.5% in most investable regions. As investors exit the market and rental property supply shrinks, landlords will likely increase rents to offset the loss of tax benefits, further squeezing tenants. A reduction in investor demand could create more opportunities for first-time home buyers, but this impact is expected to be marginal. The underlying issue of housing affordability will remain, especially if the new supply doesn't meet the demand. When investor demand slows, so does housing construction. Given Australia's existing housing supply shortage, particularly in the rental market, this could blow up the housing crisis. Fewer new homes would be built, leading to heightened competition among tenants, especially lower income renters who are most dependent on rental properties. If you're hoping that removing negative gearing will solve the housing crisis, think again. The real issue in Australia is a shortage of housing supply. Australia needs 60,000 new homes every 3 months just to keep up with the existing demand. But we are not hitting that target. In fact, we've never hit the target. Without enough new homes being built, removing negative gearing could actually worsen the housing crisis. The solution to Australia's housing crisis isn't about removing tax incentives, whether it's negative gearing or capital gains tax. It's about increasing supply. The real fix lies in encouraging more investment in new housing, not less. Thanks for watching again. Don't forget to like, subscribe and hit that notification bell for more updates on Australia's housing market and property investment tips.